Hi, I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And today we're going to be talking about, I think you guessed it from the title, RobinHood stock, and how insane it's been going. It's at about $46 per share, running 22% just today, and it ran about 10% in the past few, like on Monday. And so with that, we're looking at the stock and we're going, wow, look at all this explosive growth, right? And it's honestly it's insane. It's insane how much the stock is running up. Now we're gonna be talking about everything that has to do with Robinhood today. I did make a video previously saying like, okay, I think Robinhood's gonna fly up, and I told you why in that video, so you can go watch why I thought it was gonna run up. And now I'm gonna be talking about the future and what I think personally is gonna happen now that we have had this rally. And are we going to continue? Is it going to have a crash? Should we buy the dip after? What is going on? But I do want to say, and I don't want to exaggerate or make it seem like I was some genius, but I did articulate in my last video some reasons of why I thought the stock was like basically primed to blow up in the next coming weeks, and it happened way faster than I thought. It was in about 2 days that it happened. So the reason I had articulated before was because I believed that there were going to be retail investors shorting, or at least placing a lot of negative sentiment towards Robinhood, and because of the whole GameStop and AMC fiasco. And I thought that this would set an opportunity for those with big money, the hedge funds and stuff, to go in and buy the dip and squeeze out any shorts that were actually there. And this is precisely what played out. Now, I'm not saying I was a genius or anything, like I said before. I just think that it was kind of something that was kind of booming all over the surface that I think I picked up on, and I was like, okay, a lot of investors that are retail investors are saying, no, we don't like the stock because of everything that happened with GameStop. But if you're looking at it reasonably as a company, as its financials, as its growth perspectives, it was a deal a few days ago when it was down, when it was 30% cheaper. So with this, I think that it was primed for a jump. It made no sense that it dropped 10% on the day of its IPO. It made absolutely no sense, especially when it was valued at like $28 billion. It wasn't that crazy of a valuation, and I think it was justified. So now we're gonna be getting into the rest of the video, so go ahead and smash the like button if you do enjoy this video. Also go ahead and subscribe if you do want to watch more of my content in the future, and let's get straight into everything that's more kind of future based for this video. Okay, so with this, we have the Robinhood rallying like crazy now, right? We're up about 30-something% I think in these past few days. And now this sets us up for, okay, what is going to happen in the future? Is this kind of like a momentum play to the same way AMC and GME were, where it's like, okay, quick, just fly up and then crash back down? Or is this trying to justify Robinhood's valuation with genuine investors thinking, okay, their valuation is quite low, let's capitalize on this in the long term and play it forward? Now, personally, I think that Robinhood's valuation was ridiculously cheap at about 28 billion, even to 30 billion. And I think that now we're kind of getting to this point where it's like, okay, their valuation is starting to get more justified. But regardless, I think if you look at their financials and let's say they pull off a $1.5 billion, let's say, in revenue for 2021, I think that'd be quite incredible. I think that'd be pretty insane. And I think if you look at their long-term potential, it's insane when you really think about it. They have about 14 million users, $80 billion in assets under management, which is incredible, right? And their average account, like number-wise, is $240 per account on average. And now this is ridiculously low, as there's obviously some brokerages with like $100,000 accounts as their average, which obviously shows the big change. But Robinhood's goal was always to get the masses. It was trying to get everyone into investing easily, make it more simple, make the interface very, very like straightforward and just easygoing, right? And I think with this, they had a genius market brand, because now they have a bunch of customers, 14 plus million customers, and they're gonna have these customers for a long time. Because why are you gonna shift brokerages when your brokerage offers everything? Maybe not like us who are on social media, or us who are very like active in the stock investing game, and we're like looking at this all the time, we think, oh my god, this AMC GME fiasco. But not everyone knows about that, and not everyone cares about that. When you're being honest, not all 14 million users that are part of Robinhood care about what happened with the GME or with AMC or any of these stocks. They don't really care. They're just trying to go in, find a simple brokerage that they could invest in, and keep it simple. That's all they're trying to do. And I think this attracts a big young customer base that will allow them to have 14 plus million users and growing for decades, several decades, and I think this account average will continue to grow as time goes on, as people start to invest more and more money into the market. And I think it was definitely accelerated by in March in 2020, where everything started dipping and people wanted to get into the market because there was a lot of fear, there was a lot going on, and people just kind of wanted to learn about money, and there was more saving, there was more investing, and that's where we got this huge commotion. And then with GME and AMC, we got more commotion, and that kind of brought a lot of people into investing. So with this, now we have an opportunity here to either, if you already got in and like at the beginning of this week when I was talking about Robinhood, or even last week when I was talking about Robinhood, then props to you. You're probably up around 40% at this point, and you did a good play. That was incredible. And now you're reaping the benefits of your kind of dissecting of this information. Now, if you haven't, and now that you've seen this, you're like, okay, there might be an opportunity here. Now, maybe you're looking at it and saying, okay, well, when are we going to see a dip? And you could trade the dip or long-term invest. Personally, I did get some and I traded it up on this kind of rally because, as I articulated in the video, I told you, I said, I think that we're going to see a huge rally, and I think we're going to see it quickly, and then I'm ready to get out at that point. So I did trade this. I wasn't sure about a long-term hold yet, and I did already sell, and you can say paper hands or whatever you want, but when you say something's a trade, make it a trade. If you think it's a long-term hold, then create a whole document of why it's a long-term hold and set time periods of how long you're holding it and why you're holding it. This to me was a trade. Now though that I've looked at it, I'm like, okay, I've looked at the financials. I think it's kind of sound. I think I've looked at their customer base, and now I do see the longer term opportunity. I do see this more, okay, there is long-term potential when it comes to Robinhood. And I think with that comes a huge customer base that will go on and grow on, and it's already huge, and they will continue to raise their average account value and have more and more and more assets under management. So someday, who knows, maybe they'll have $1 trillion of assets under management. You never know. Crazy things like this can happen, especially over the long term. So we'll see what happens. I definitely think that I am more interested in them as a long-term hold now as opposed to just a trade. I do wish I held on to what I had traded. However, if you set something as a trade, and then make sure you execute on what it is that you said it was going to be, and then if it's a long-term hold, then you execute on that as well, or at least that's what I go by, because those are my principles. And I don't want to, if you end up getting in a trader mindset or you just get stuck doing these things, then you're gonna end up messing yourself up because you're confused on your long-term hold versus your trades. So make sure you have that very clear and very vivid in your mind. So with that, I think we've kind of brought it to the end of the video. My kind of analysis of this is that I think now that I do see the real value in the long-term hold, I will be buying some if there is a dip, a substantial dip though, because I'm not trying to buy it at this 46 price or even higher than this if it potentially goes to that point. But I do think it's a solid company. I think it has solid financials. I think it has a solid future ahead of itself. I think they've made many issues, but I think that they can overcome this and that they will do great in the future. So we'll see what happens. I'm definitely excited for them. I definitely wish them the best, as I do with any company. If you don't like them, that's your opinion, and you're free to have it. Let me know, what do you think in the comment section down below. I don't think that the GME and AMC thing was justified. I was in those stocks, but oh well, you can't turn back in time and do a bunch of stuff to get mad at them. Oh well, it happened. Now we just move forward, see what happens. So go ahead and smash the like button. If you did enjoy this video, let me know what you think in the comment section down below. I'll be happy and glad to chat with you guys down there. Also, go ahead and subscribe if you do want to watch more of my content in the future. I try to upload every single day, 1 to 3 videos. However, I do take 1 or 2 days off per week because sometimes you just kind of need a recoup, or sometimes there's just not enough news. So I'll see you in the next one. Sign up with Public, and if you don't like Robinhood, or if you do like Robinhood, who cares? Sign up with Public down below. You get some free money, up to $70 of a stock of your choice just for signing up. So go ahead, get some free money down below. See you in the next one. This was Kev's Mindset.